Good afternoon. My name is Doug Ostrov. I'm with New York Legal Assistance Group, or NYLAG, our financial counseling division. And I'm here today to talk about credit reports, credit scores, and understanding your credit as part of the Chabad partnership and project that NYLAG has with Chabad. It's an ongoing series. This topic actually I've offered in the past, and by popular demand, we're putting it out again. Really, it's a segue into an opportunity to hopefully talk one-on-one with a NYLAG financial counselor professional. Everything is free and confidential. We'll give out a hotline momentarily and at the end of the presentation. So today's intention is really just to be an overview of some of the key concepts and issues that come up with your credit, and we'll jump right in. I should also point out that there's an opportunity for questions. On the sidebar, you should be able to type them in. I may get to them periodically throughout, but most likely we'll hold answers until the end. So appreciate your patience there. If you have any sound difficulties, technical difficulties, also please feel free to shoot me a message in the chat box. Okay, this is a standard disclaimer. Just that the information provided during this presentation is of general nature and not intended to provide legal advice, given that we are New York Legal Assistance Group, nor does it constitute advertising or a solicitation. This is the first of a few times you'll see the opportunity to call us on our Chabad phone number, project hotline, 212-613-6596, 212-613-6596. The New York Legal Assistance Group is a nonprofit organization that offers low-income and other vulnerable New Yorkers the legal help, and in this case financial counseling help, they critically need. NYLAG provides free civil legal services to New Yorkers who would otherwise be unable to access them. And happy to say that we've had a financial counseling division since around 2007, 2008, 2009, around there. Really took off as a response to the economic recession. And we have a number of projects across New York, New York City, Westchester, and Long Island, and some national initiatives. For more information, please feel free to go to nylag.org, Financial Counseling Division, or the Chabad webpage, also at NYLAG. So what are we going to talk about today? Just briefly, the agenda. I think many of you, if you're listening to this or listening to the recording of this, you know, credit is one of those things that you may know a little bit about, but certainly it can get very complicated, and your credit report is really what's most crucial to understand how to access it, understand what's in it, understand how that in turn translates into a credit score, that one number that people seemingly seem to obsess over for many justifiable reasons, although it doesn't necessarily represent everything and all of your history and all your financial choices. That detail is really not in the number itself. It's really on the credit report. So they're intertwined, and we'll talk about that and why it's important. To some extent, how to read the report, although that will really come when we have a chance to do one-on-one interactions, financial counseling, where we look at your credit report, which can be downloaded for free. Or if need be, we can get access to it as well if you can't get it the free way. And we'll talk a little bit today about what goes into the credit score, some of the factors that might hurt and help your score. Errors that might appear on your credit report can be disputed. And then finally, what is really most important is, despite anything that you've been through, any sort of major recent or ongoing issue financially that has affected your credit in a negative way, we'll talk about how to potentially rebuild your credit, and we'll also do that on a one-on-one basis. So we're going to touch on a lot of these things. There's a lot to cover. So as I mentioned, we'll start with the credit report itself. Essentially, it's a record of your entire financial behavior, your history of what you've borrowed, how you repaid it, the timing in which you repaid it, if you've been delinquent on anything you might owe to a bank or creditor. Essentially, whenever you get access to credit, if you're fortunate enough to get it with good terms or bad, if you get access, that lender will report that information, that account information, to the credit reporting agencies. There's 3 of them. I'll mention them throughout, but TransUnion, Equifax, and TransUnion, Experian, and Equifax are the 3. And these are essentially the only official governing bodies for your credit score set up by the government to really work with creditors, your banks, credit unions, to receive the information based on your finance, your banking, and your credit behavior. So that's all governed by, in theory, the government and the Fair Credit Reporting Act, which you can get access to. And as I said before, all the information that's on this report generates a score, which, for better or for worse, kind of paints a picture of your finances, which helps inform lending decisions, among other things, for creditors and banks. Why do we care? Why do we care? So we care for a number of reasons, or we should care for a number of reasons. I care for a number of reasons, because your credit score clearly determines the availability, the price, and the terms of credit. I mentioned terms a few times already. Essentially, that's just your financing terms, the interest rate that you pay to get access to money, to get access to a loan, to get access to a mortgage, a car loan, in a credit card. These are the things that are most important in terms of terms, and your credit score is looked at to help determine what those terms might be. Not so obvious, and we'll talk a little bit more about that, but not so obvious is, especially in New York State, for example, and many other states, it's not discriminatory for employers to base their employment decision on, in part, what your financial history has been and what your credit score and your credit behavior indicates to them as a result of a poor credit score, for example, in terms of them deciding whether or not it's worth their risk in hiring you. Now, I said it's not discriminatory because in New York, but in many states, people are probably aware that it is discriminatory in some states. I believe there's still pending legislation in New York, for example, to fight this and continue to fight this, because, frankly, it's not entirely justifiable or fair, given a major financial disaster, a foreclosure, a bankruptcy, and relatively healthy behavior since that event. You would think you would get a second chance, and you would kind of a catch-22. You really need a job with income in order to help, pay your debts and pay your loans and, pay your bills on time. And without that job and income, it's going to be hard to do all that, except you can't really get the job in some states, if, especially in certain industries, especially financial industries, if, frankly, you have a poor credit score. So it's a tough situation, but it's not exclusive to employers looking at your score. If you want to, if you're a student and you have a poor credit history, which undoubtedly you would, because you just haven't had the opportunity to build a credit history at such a young age, other than perhaps maybe a student loan or some small credit cards, it might be hard for you to get your first rental apartment and pay rent. Landlords look at your credit score. Obviously, I pointed out lenders. That's in terms of credit. They look at insurance companies, utility companies, the amount of security deposit you put for your cell phone. Historically, for many low-income communities, basically consumers suffer with poor credit scores and have to pay higher deposits because of it. So it's not just employment. It's a number of things, and you care because you also want to make sure that, everything that's listed, and we'll look briefly at a credit report, but everything that's listed on a credit report, it needs to be accurate. The poor choices and poor behavior that others might be making on your behalf, or if they steal your identity, that's something you want to know about. So you've all heard of fraud, ID theft and fraud. Well, first of all, if someone stole your ID and are making a number of purchases, and there's a number of different behaviors listed on your credit report that don't correspond to you, and you're a victim, then clearly your credit score is going to be affected, and you want to remedy that. There might also just be errors. There's many errors that we try to dispute, and we can dispute, especially if, for example, a debt is attributed to somebody else who might have the same name as you or a similar name. That's something that we want to dispute, and it's something we could talk about if you think you've been, if you think there has been an error, or more to the point, it could just be a simple error of payment. You think you made the payment, you have proof you made the payment, but the doctor's office or the vendor, whomever you're making a payment to for a purchase, claims otherwise. So we can dispute that, and we do dispute that. So all these things factor into your score. I will point out that there are things that are not included in your credit score: income, race, religion, gender, marital status, your age, nationality, things like that. And nor should they be. If you think they are for some reason or another, then that's something clearly that we should talk about. I mentioned the Fair Credit Reporting Act. These are some of your other rights. So the first step in order to actually understand your report and your score is to get a copy. The easiest, best, and only real free way to do that is the first website listed there, annualcreditreport.com. That is the only website that the government sanctions. The 3 credit bureaus that I mentioned before come together to make your report accessible and free to you once every year, once every 12 months or so, or exactly once every 12 months, I should say. Now, obviously, you can download your report through many other ways. Banks and creditors and lenders and car companies, insurance companies, sometimes utility companies, they can all get access to your report, and you have rights to get a copy of your report. For example, anytime a lending decision has been made, if you get turned down for some sort of loan from any of those entities, you have a right to get a copy of the report that they are looking at. But as a consumer, the only way you can get it for free on your own is through annualcreditreport.com. Now, there's other sites, I should say. That's the only sanctioned government, regulated site. But there are other sites that basically offer, for lack of a better word, a proxy to your credit score. One that we typically use, though I'm not necessarily endorsing, is Credit Karma. That's one that's worth mentioning, I think, because it'll give you a relatively good proxy of not only your score, but you can see your report as well. I believe they pull from TransUnion, one of the bureaus. So they also offer ID theft and fraud protection and other pay-for services, so you have to be careful not to actually sign up for anything that you don't want to sign up for. But it is free, and it'll give you a good sense of kind of where you stand. And frankly, if you're not able to get your annualcreditreport.com report, Credit Karma might be a way to go. And in fact, if you want to see your score, that's certainly something quickly that you can see right on the screen after you kind of confirmed your identity. And there it is, Credit Karma on this slide. I mentioned it. Quizzle, I guess, is another one. I would point out that the score that you'll probably hear about is the most commonly used and referenced score for credit scores is your FICO score, which is based on the score founded by Fair and Isaac some time ago. It's the most commonly used score, but there's many derivations and models that approximate the FICO model. Vantage score being one of them, and that's actually something that I believe Credit Karma pulls. All the credit bureaus, have different kinds. There's no one FICO score necessarily that seems to be commonly used. There's many different factors and variables that go into their model. It can get quite complicated. So really, you're just getting an estimate when you're looking at any one score. For example, you're not necessarily comparing exact apples to apples when you look at the score you have downloaded for free, say, versus the score that a bank might be looking at based on a slightly different model for their lending choice. But you still have a sense of everything that's on the report, of a general sense if you're in the kind of the excellent range, the good range, the fair, average range, poor scores, things like that. And we'll tell you that. I'll also point out, I don't mind saying that we do have a paid-for service to get your credit score and report through TransUnion. If we find that not only you cannot get the free score at all or in an efficient, timely way, or having technical difficulties, if we deem that you're in a situation where we really need to know where you stand, we need to kind of corroborate and verify some accounts on your report, and we want to know what your score is, especially if you're post a major financial event like a bankruptcy, like a foreclosure, a number of delinquencies on your credit cards, meaning you're not paying on time for not just 30 days, but 60, 90, 180 or more before something goes to collections, or even if it's in collections. These are the kind of examples where we might actually pull the score for you. It's a small cost to us, so we don't do it for everybody, but we're happy to do it when appropriate. So I thought that was worth mentioning. So I'm going to be going through a little bit quickly on some of these things. Don't worry about having to read the report exactly. I mean, that's what we're here for if you do call in on the hotline, which I'll give out again later. But, you know, if you're interested, there's a number of different sections on a report, which basically will pretty much list all of your basic information, you know, all of your contact information, your current address, former addresses, and then it'll start listing fairly quickly any negative items, any adverse accounts, any accounts which have delinquencies on them. You'll be able to see, or we'll be able to see, it's pretty apparent. And that's what we'll start with, is the negatives. Anything that might be closed by the bank or by you, by the creditor or lender, or by you, and it'll notate how and when it was closed, that'll be listed as well. And certainly that's important. We'll talk about the makeup of the credit report and how that actually, and that behavior that you exhibit over the course of many years, how that actually comprises, you know, the data that dictates what your score might be. But essentially, you'll see a number of pieces of items, that will list collection accounts, bank accounts currently open, revolving credit, which is basically your unsecured credit cards, your student loans, your mortgages, things like that. Obviously, if you have access to your credit report and there's not much on it, it's probably because you never established your credit. Maybe you're new to the country, or maybe you know, you're just very young. I mentioned earlier students, with the exception of maybe student loans, which may or may not even be in their name, could be in their parents' names. They really have limited, or what we call thin file credit histories. And you know, that's something that is important to understand, because there's things that we want to do, the earlier the better, especially with younger clients and consumers and students. You know, we want to establish a history as soon as possible, and then provide a consistent history of on-time payments. Essentially what it boils down to is the opportunity to make on-time payments over the course of many years. And then the percentage use of those credit lines, you know, is important as well. We'll talk about that, but as well as some other key pieces. So your information, any inquiries that might have been made on your behalf when someone's trying to make a decision, and it could be something as simple as a store card, like a Macy's, Banana Republic, or it could be something larger, like you know, one of the big banks trying to make a lending choice, whether to give you a credit card, a mortgage, car loan, something like that. So it'll, as I said before, it'll listen the dates open, the dates closed, months, last activity, your credit line, the balance that you have as a snapshot. It will list the date that it's looking in that particular moment to see what your balance is. Obviously, that won't necessarily be accurate if you've made a payment or a series of payments since then to bring the balance down, or conversely, if the balance has gone up. But it'll say all that, and so it's a snapshot. It's not dynamic, but it'll give us a good idea of where you are. Unfortunately, some people are dealing with you know, larger things like bankruptcies, and then those will certainly be a big part of kind of trying to recover and build your credit score back up. But property tax liens, court judgments, all these things will be on there as well as negative items. Not really going to go through this so much, but you can see here just kind of a basic consumer credit report. when you get yours, we'll go through it line by line with you. So there's an example. Continues on. You can see, the trend summary there in terms of the total balances you have pertaining to different accounts, bank and credit cards, installment accounts, unsecured credit cards, retail cards, mortgages, etc. Whether they're 30, 60, 90 days past due, etc. So I mentioned the credit score range earlier. I'll just point it out again. This isn't necessarily completely up to date, but in general, that's kind of the range and the distribution. Anywhere from 300 to 850 for the FICO score. I'll point out in a minute other models that have a slightly different range. But generally speaking, if you're over, not to fixate too much on any one number because it can change, pretty quickly. But in general, if you're over 700, that's something we would consider excellent. And I would say a relatively small amount of, good new behavior, if that makes sense, paying new credits, balances in a fairly quick amount of time, 3 to 6 month period perhaps, will bump up your score fairly quickly to that next tier. If you say you're, for example, in that 650 to 699 but want to get above 700 or get closer to 800. So there's things that we can do, and we'll talk about that in a second. So there's a number of things that will affect your score. I've kind of already alluded to a number of them, but the far and away the best way to think about it is kind of how I alluded to it before, is do you have the opportunity to make consistent on-time payments for debt, good debt, not bad debt, there's a difference, over time? Most of which is going to be reflected in a mix of secured and unsecured debt over the course of many years. And that is your payment history and the length of credit history and the specific amounts owed as well. So we'll go through these a little bit. To a lesser degree, your new credit and the types of credit are important as well. So the first one is your payment history. And I apologize, I know some of these slides get a little bit dense. I'm not going to go through it completely line by line, but essentially this is where you're going to be looking for most people on accounts such as your credit cards, so your Visas, your MasterCards, American Express, Discovers, retail department stores like the Macy's and Banana Republic, although there is a little bit of difference between a store card and a credit card store card. If you have questions about that, I can explain it. But essentially, any plastic in your wallet will be affected in this category. And what we're concerned about here is, are you making payments on time? Are you delinquent? Are there a series of ones on your credit report to indicate on a particular month for hopefully 12 months in a row you made your monthly payment? Your statement came in, you made the payment on time, you weren't late, you paid in full, or at least you paid the minimum. Provided that you pay the minimum, your credit won't be affected necessarily, with a big caveat, which I'll talk about in a second. But for most people, it's not about the amount that they're paying; it's about the fact that they're paying at least the minimum on time every single month. Now, the caveat is important because the makeup of your credit score, or the amount of your credit score, and this is just a rough kind of percentage breakdown, that's also 30% of your score. So the key thing here is something called a utilization ratio, your credit utilization ratio. So the amount that you're paying each month is important because depending on how much balance you have left over, not just on any one credit card, for example, but on the overall aggregate amounts, the total amounts of all monies owed on all of your credit, the percentage of that credit line, so say you have $10,000 available to you across 1, 2, 5 cards, it doesn't matter, but it's $10,000 total, that credit utilization ratio, or the percentage of that credit line that you're using, is important. Generally speaking, A major red flag will go up if you're using more than 50% of that credit line. 50%. So half of your credit line is being used, your entire credit line. That's a major red flag. And in some cases, you really want to try to stay below 33%, or a third of your overall credit line is being used, or your credit utilization ratio is 33%. So if you're only making minimum payments, that leaves a large balance potentially out there that you owe money on, which could be more than the 33% of your credit lines combined, or more than 50% of your credit lines combined. I'd really focus probably on at least 50%, but to be comfortable, I would have the long-term goal to be 33%. Now, keep in mind that you are looking at your overall usage across all cards, but you also want to look on an individual basis too, just for your finances. The larger the balance you have on a particular card will hurt you in different ways depending on your financing terms, which is a little bit off topic in terms of your credit, but worth mentioning because if all you're concerned about is your utilization ratio, your overall utilization ratio is good, but one card in particular you're still getting close to maxing out, say, and that card happens to have a large balance and a high interest rate, or annual percentage yield, APR, meaning what you're paying to basically have the bank lend you this money, well, then it makes no sense. It's kind of counterproductive. You might be okay credit score wise, but money's coming out of your pocket every month on a card that is charging you a lot more than perhaps another card you might have. So I don't know if that's confusing at all, but the bottom line is with credit, you do want to be mindful of your utilization ratio, but not at the literal expense of having higher financing charges on balances that you're allowing yourself to carry because maybe you have very, very low usage on all your other cards except one. But if it has a high interest rate, that's a problem. So keep that in mind. It's worth mentioning a few other factors here. The length of your credit history, clearly very important. In general, and we get this question all the time, and I'm referencing mostly credit cards because that's kind of the context that comes up, but the length of the credit history, the longer you have a credit account open, and generally speaking, the better for your credit score. So when people ask me, should I close this account or that account, one of the things we'll look at is, is it something that you've been having the opportunity to pay on-time payments for a long time. And by closing the account, you remove that opportunity, you remove that credit history, that positive credit history, and that'll have a very detrimental effect. 15% is a pretty big deal. So generally speaking, you would want to keep those lengthier credit accounts open, even if you're not using them, provided that they have no annual fees or any other hidden fees like that. Keep it open and use it, I always say, to buy a pair of socks every once in a while. You're better off maintaining the positive credit hit from a lengthier, older account than closing it. Now, having said that, there are, just for your own peace of mind, you can get out of control perhaps with many, many, many cards, especially store cards. You can close them, especially if you open them fairly recent and they're just a store card. I would point out, though, that new cards, as you can see in the next bolded item there, that's also a factor. So you can't just rest on your laurels on that one credit card or two credit cards or other access to credit, not just credit cards, that you've had for a long, long time now. Every once in a while, you do want to have fairly new credit. If it's been a long time since you opened a new account, it actually wouldn't be the worst thing in the world if you're otherwise in decent shape and you don't have too many cards to begin with or too many other, debts, to open a new account from time to time. So that's another 10%. And, essentially, it's not an exact science. It's just kind of a rough estimate. But I do want to point out that, once you have established kind of your credit, and once you're kind of going through your day-to-day, making financial choices, you can see that there are, this isn't an exact science, as I said, but you can see in these two examples what the current credit score or FICO score is and how it's impacted by common negative behaviors. such as maxing out a credit card, a 30-day delinquency, which I'd point out in general, it's that first delinquency which has the greatest marginal impact. Clearly, all delinquencies will have a negative impact, but the biggest impact is generally the first one. That's the marginal impact of that very first negative event. And then it just gets worse and worse overall as you have more and more delinquencies. Foreclosures and bankruptcies obviously are the single biggest events or financial disasters, I suppose you call them, that will quote unquote destroy your credit. Bankruptcy being by far the worst, and you can see the impact there. In general, the higher you are, the greater you have to fall. So column B will have the marginal impact. When you have a very, very high score and you have a sudden negative impact, a negative item, the result can be even more onerous on someone who might have excellent credit to begin with. And that makes sense too, because banks look at it as a red flag, an initial red flag, a warning sign, and hopefully, but sometimes an indication of other kind of future bad things to happen. But sometimes, negative things happen to the best of us, and that's why it's important to stay on top of things and to try to remedy them as soon as possible, so you don't have this initial large hit. Hopefully that makes sense. Just some more stats. It's hard to find some of these, but just give you a kind of a rough idea. The range of FICO scores and the kind of interest rates. Again, these are out of date. Obviously, you can tell by the rates. But even though they're a few years ago, it still gives you kind of a general sense of the excellent range, the good range, the average to middle range, and then the poor range of FICO scores. How that corresponds to interest rates that go higher and higher as you have poor and poor credit. So those are dollars right out of your pocket. So it has a very direct, tangible feel or impact that you'll feel right in your wallet. So I hope VantageScore is okay with me stealing this lovely chart. I threw it in there because it's a different model. I give full credit to VantageScore. One of the representatives at a conference I attended not too long ago was talking about their particular model. And they really like to focus more so than anything recent credit. They don't, I guess in my view, want to penalize you as much for those big mistakes that you have since proven to recover from. And so although some of these things fall off your report after a certain amount of years, like bankruptcies after 7 years or so, these things happen, but generally speaking, you don't want to be haunted by negative items for the rest of your life, and they also like to focus on the now and your recent behavior. And so their model's a little different. You can see that their range is a little bit different than FICO. In general, the 501 to 990 and the grades A through F approximate the FICO different ranges that I showed earlier. But it's gaining more and more popularity as are other versions of FICO itself. They're always trying to tweak it to reflect the ever-changing kind of demographic of consumers. For example, a lot of people can't establish credit for many reasons, as we've discussed, but one thing that newly arrived citizens and immigrants to this country have a hard time doing with their thin file is establishing credit. So one thing that I know is being experimented with is the idea of using utility payments, on-time utility payments, electric bills, cell phone bills, utilities, to help establish positive series of on-time payments and behavior. Another thing that's being talked about is the idea of using your rental payments you're paying your rent on time. Right now, you're not getting any credit for that in terms of your credit score, but that shouldn't be in the views of many, and that's something that's being experimented with and looked at literally as we speak. And so hopefully, and that would certainly in New York and other large cities, that would be a big boon to people who otherwise have poor credit but want to get credit for their on-time rental payments. Again, this is just, you can go through this if you'd like, but just shows a little bit more impact. This is not necessarily particular to Vantage score, but the negative items I thought were interesting. You could see the drop off between scores, and kind of that marginal impact I was talking about through some of these negative items. There's other things that have smaller impact on your credit that people tend to make a relatively disproportionate amount of stink, for lack of a better word, over it. So, meaning people get upset on an inquiry. Well, what you should know with inquiries, meaning when people are looking at your credit to help make a decision, you don't want to get penalized, for example, when you're shopping around for a new car loan, a new mortgage, something like that. So the key there is it all counts as one inquiry, which has a negligible hit, 10, 20 points, which you'll make up for if you ever get the loan and start making payments on it. As long as you do the loan shopping for the best terms within a consolidated 2 to 3 week period, it'll all count as one inquiry while you're shopping for a new loan. So I know I was going to mention that later, but it came up here. It's a key point. A lot of people get upset about it. They think that when someone's looking at their score, that's going to be a hard hit. And I should distinguish between a hard hit and a soft hit. For example, if you can't get your free score, when we pull your score for you, it'll be a soft hit, and it will have a negligible impact on your score as well. So you can go through some of these other scenarios that I mentioned. I did want to just touch base on kind of a subtopic within kind of this whole area of credit and staying on top of things and monitoring your credit. The biggest area, and many of you are aware of this, the biggest area that has the largest impact on negative items on your credit report and problems with negative impact are related to medical bills. Now, these numbers are probably much higher than they are now, but back in 2010, 30 million American adults were contacted by a collections agency for unpaid medical bills. As you can see here, there's the 30 million. More than half of accounts and collections, or 52% at this point in 2010, more than half of accounts and collection are medical bills. So that's what I mean when I say that one of the biggest culprits, more than half of all collections that would undoubtedly be listed on your credit report are due to medical bills. And why is this important? Well, more than 1/3, 36% of these medical collections had balances due when reported of $100 or less, or more than 70% of medical collections had balances due when reported of $250 or less. So what's my point? My point is that a relatively small amount of money owed to a doctor or hospital or healthcare provider, either $250 or less or even $100 or less, when not paid, when delinquent on them, that triggers or that starts the process that leads to collections, most likely, and a very large negative impact on your credit. And this is something that is, in my view, in our view here at NYLAG, it's very preventable. We all know what happens at doctors' offices and other providers in terms of co-pays, in terms of co-insurance, medical bills that you think you might pay, co-payments that you think you paid. Almost always, if there's some sort of negative item of $250 or less or $100 or less, it's related to something that could have been avoided if you just stayed on top of these things, had copies of your receipts, use the credit card to your advantage and make these payments so there's a record of them, rather than a check that never made it in the mail or was lost, or was never actually applied, et cetera, or maybe it bounced, So my point is this relatively innocuous, little kind of innocent $30 copay is actually quite important in terms of your credit, and so you want to keep track of all these things just to kind of make this point, drive it home, there's two examples. I'll just go through one of them, how discrepancies on your medical bills can leave a major credit stain. This guy in Texas had just a $200 ambulance bill, which he paid despite the assurances from the insurer that was covered. It was only when he and his wife went to refinance their $240,000 mortgage 6 years later that he learned that bill had shaved 100 points from his credit score. He was otherwise really on top of things, no other debts, healthy income even, otherwise excellent credit, and the couple had to pay an extra $4,000 to secure a lower interest rate. So these relatively small medical bills, if not monitored and sent to collections and have a negative kind of impact on your score, will have a negative impact on your financing terms. That's an exact kind of a specific example of what I'm talking about, and it could be much, much more than just $4,000. If you live in Westchester or Long Island or New York, where we're based, good luck with a $240,000 mortgage. You're probably going to be looking at way more than $4,000 on a much higher mortgage. So it's worth following these things. There's another example that you can read here. And I guess Vantage wanted to make the point that TransUnion states that medical debts are not typically reported unless they become delinquent and are assigned to collections. So that drives the point home that you really need to make sure that everything is cleared up on your credit report, disputed, or handled with the creditor, or in this case the medical office, prior to something being sent off to collections. And in most cases, you'll have ample time to do that. You can file a dispute. We can help you do that. And again, this could be something very, very small, could be something very, very big. Correcting, accounts sent to collection in error, kind of what I was just talking about, or duplicate listings for the same account. Many consumers believe that paying off collections accounts will result in deleting it from their credit report, but they must be removed from a report in order for a score to improve. Sometimes you take care of it, everything seems fine, you have assurances, but it's not removed for one reason or another from the credit report itself. You want to get credit for the remedy that you fought hard to get. In general, when you file a dispute, you have rights. So one very specific right is that you should get a response within 30 days from one of the credit reporting agencies. So TransUnion, if that's who you're writing, needs to respond within a month. If after hearing back you still disagree, you can attach up to a 100-word statement. Hopefully you're already attaching all of your proof of payment and other kind of supporting documents in the dispute, along with a dispute letter. This is just a generic copy, so you can feel free to use that if you find something on your credit report after you go ahead and download it and you want to dispute it. This is found at the Federal Trade Commission site. There's a number of good sites. This happens to be one of the better ones, I think. FTC.gov, their consumer protection section. Of course, you can go to the Consumer Finance Protection Bureau as well. Number of resources available for disputes. To sum up, because I think we're getting close to out of time, but we have about 10-15 minutes. That's good. Okay, so help your score. How? Well, kind of already alluded to it, but just to sum up, pay your bills on time. Probably the most important factor to keep your score stable. Pay down all of your balances on all your cards. Higher scores for low balances. Essentially, you do want to kind of triage or prioritize how you pay all your bills, including your credit card, based on the financing terms, the balances, the length of credit history, the credit utilization, I should say, things like that. But in general, if you're paying on time and you're paying down your balance, making at least the minimum payment, but hopefully payment in full so you can maintain a really good utilization ratio, that's important to help your score. Pay your delinquencies first. The impact of the delinquencies will fade with time. Hopefully you're not in a situation where you miss a payment, but it happens to the best of us, and hopefully you can remedy that as soon as possible. We already mentioned just now correcting errors on your reports and disputing them. Conversely, you could hurt your score by missing your payment, by maxing out your cards, by going through a bankruptcy, a foreclosure, judgment, a tax lien, Closing counts, which I talked about before. Obviously, some counts do need to be closed, but not necessarily, those old counts which you now know to keep open to buy a pair of socks. So a couple other kind of do's and don'ts. Just what I was talking about. Do not close unused credit cards as a short-term strategy to raise your score. Do not open a number of new cards that you don't need just to increase your available credit. This could backfire. That's so true. I did mention the importance of having recent credit or new credit, but that doesn't mean going on a spree of opening up a number of cards, because all of a sudden that'll increase your potential credit line available to you across all cards. And depending on the utilization of those cards, if you start maxing out or even using a good chunk of them, that will have a negative impact, despite the positive impact of new credit. Overall, you'll have a negative impact if you open up too much new credit and you're using a lot of it. I guess I mentioned the rate shopping within a short period of time. That's the penalized for loan shopping point that I made earlier. So I guess that's essentially it, which is good, about 46 minutes. This was recorded. You can go back and listen to any one thing. You can go through your own credit report if you are able to access it on annualcreditreport.com. I think the key thing, when you go through it on your own, is if you have any questions or concerns, you're having trouble understanding what's there, or whether or not you might be a potential victim of identity theft, or whether you see something you want to dispute but you're not exactly sure what kind of supporting documentation you should send in. If you are able to get your free credit score either by a proxy from site like Credit Karma, or you can actually pay for it, it's not too expensive, from the credit bureaus, and you get a score, or you've had a lending choice, a lending decision, I should say, recent, and you were turned down, and you have a poor score, etc., and you want to talk about things you can do to improve your score. It's not just your recent behavior and the negative things we discussed, but there's positive things that you could do too. So, opening up a secured card, perhaps even through something like a credit union, which has a little bit more lax standards for becoming a member, and kind of turning that secured credit card or that secured loan into an unsecured loan or unsecured credit card. It's a very common practice nowadays. If you want more information on how to potentially do that, or how to potentially register your utility payments to build up your credit score, or as we get more information on registering through participating landlords, your rental payments, your rent payments, hopefully on time, and you want to build your score that way. These are things that you can and certainly should do if you have poor or no-file credit histories, or you're coming out of a bankruptcy, or the recession. Frankly, over the last 5 years or so, a lot of people want to kind of start fresh and build their credit score again, both, as I said before, to get a job, to get better terms on a potential loan, and get an apartment to rent, get better insurance products, whatever the case may be. It's a crucial thing that others take very seriously, and therefore you should too. So we're happy to talk with you. Again, the hotline's there, 212-613-6596. Leave your name and number, and we'll get back to you fairly quickly, within 2 days usually. And first come, first serve, but generally speaking, we'll get back to everybody's. And it can all, for the most part, be done over the phone. We can kind of guide you through where you might be in that credit review process, or your credit score rebuilding process, whatever the case may be. And in general, it's not just about your credit. The financial counseling program and division at NYLAG really is all-encompassing. It's a holistic approach that looks at budgeting, money management, debts, pre-tax prep, and just getting organized in general, and of course your credit. So we'll integrate kind of the credit piece into a larger context, and happy to talk to you over the phone about all that. Again, thank you so much for all of your participation, whether live now or listening to this recording, which will be disseminated shortly. And I look forward to hearing from you on the project hotline. Thanks again.